Well, definitely after taking a breather yesterday, once again we're back, or the benchmarks are back to its winning ways. Nifty is up firmly at about 13,562 as we speak. Sensex has gained close to 300 points as well. Broader markets also trying to participate in today's comeback of the markets. You have a small cap index actually outperforming. It's up more than 1% as we speak. Midcap index also picking up steam. It's up more than 100 points as well. So good gains coming in and broad-based, more importantly, gains coming in as far as the market breadth is concerned. You have about 37 stocks on the Nifty 50 which are biased towards the advances. 13 odd stocks declining in trade. As far as sectors are concerned, barring pharma and realty, all of them are firmly in the green. You have Nifty Media once again in the lead, which is up more than 1.7%. Nifty Metal also logging in similar quantum of gains, top sectoral gainer at this moment. PSU banks once again are staging a comeback. The index has gained close to 2%. You have Nifty Bank also up 0.5% as well. As far as individual performers go, you have oil and gas stocks which are looking very resilient, and ONGC gaining in the excess of 7%. So is GAIL actually. NTPC is also up more than 4%. IOC is up 3%. Coal India is also up a healthy 3%. UPL once again has witnessed a U-turn of sorts after sulking yesterday big time, being the top loser on the benchmark index. Today is up 2.5%. Tata Steel up 2% as well. ITC continues its winning ways, up 2%. Indusine, Tata Motors, BPCL, these are some stocks as well which are looking very, very resilient and contributing to the up move on the benchmark index. Let's pull up the stock cloud as well to understand what the stocks you need to keep on your watch list. ITC definitely has to be the top name. It has been gaining for quite some time now. Today also is up 2% in trade. You have UPL. Management clarified yesterday on a con call about the whistleblower concerns and issues. UPL again witnessing a U-turn of sorts in trade. Today is one of the top gainers on the benchmark index. SpiceJet, Snowman Logistics, both are also looking fairly resilient. In fact, the entire logistics pack is looking very good, and Snowman definitely is leading the up move there. Canara Bank has announced their QIP details. The stock is up as well in trade. In fact, the entire PSU bank index has seen a very solid comeback, and Canara Bank one of the top gainers there. You have some commentary coming in from HDFC Life, keeping the stock in focus. IRCTC has now put 20% of their paid-up equity share capital for OFS. That's an update that came last evening. Ircon International looking very, very buoyant as well. They saw a 900 crore order win from NHAI last evening, and PNC Infra also essentially gaining in trade on back of a new order win. Back to you, Varun.
Okay, thanks for that, Karanya. Let's pull up the quiz question quickly for you. BNSN Quiz Connect, it's a daily feature, and you guys now have around 40 minutes in which you can tweet your answer to us. If you get it correct, we'll feature your name on the channel at 11:45. The question is, which one of these pharma companies saw double-digit growth in the secondary sales in November 20? Indoco Remedies, GSK, AstraZeneca, or Ajanta Pharma? So these are your options. Do tweet to us, and in around half an hour's time, you'll know the answer to that question. But now that we've got that out the way, we have our experts with us, Kunal Bothra and Vikas Sethi, joining in to talk technicals and fundamentals. Great to have you with us, as always. Kunal, coming to you first, what's on your radar today as far as a high-risk and a low-risk idea goes? And just one question, Karanya was just saying the whole logistics pack looks fairly activated. But if you look at companies like TCI Express, which are also considered to be leaders, there's no movement. You're seeing a lot of movement in Snowman, but not for the leader, for example, or even Mahindra Logistics for that matter. So what's your read on that? And then, of course, your high risk, low risk for our viewers.
No, yes. In terms of market breadth, first, that the market tone is extremely bullish. We've seen how yesterday's day panned out. After almost a 300-point fall or 400-point fall on the intraday charts for Bank Nifty, we saw a very good recovery in the second half yesterday. So that itself tells you that the demand is still very strong and robust for the indices. which is why I think the markets are getting a lot of traction. Now, coming to your question, on the logistics space, I think it's very, very fragmented. The markets have gone to such a kind of mode where not all stocks from each sector it tends to participate. It's very, very specific towards the kind of stocks and sectors which we see on a routine or a daily basis. For example, last week we had the pharma stocks doing pretty well. Even in the pharma pack, you just had 2 or 3 pharma names which did pretty well for themselves, but the other, rest of the pharma stocks did not participate that much. Yesterday, FMCG stocks had seen a good follow-through price action. Today, these stocks are lacking a bit of, I would say, momentum. So I think in that regard, it's very, very specific towards the kind of names which have moved up higher. Aegis Logistics, Snowman, many of these stocks, they've seen some spurts of short-term price uptake, but it's not resulted into a significant uptrend. Coming to the picks, 2 buy calls which I would want to recommend, and both categorized from different nature of beta stocks. So the first one which I'm recommending is about DLF. Now, I think the stock is looking extremely strong and robust. More importantly, I think the entire real estate pack, like the Oberoi Realties, Godrej Properties, etc., are looking extremely strong. DLF was one of the few, stocks from the large cap and cap space which did pretty well yesterday as well in the second half, and I think managed to close at the highest point of the day. So even though the stock is a bit muted today, I think DLF should pick up pace over the next couple of days. So it's suggest a buy with 230 as a potential target, and stop loss could be kept at 210 because of the beta nature. I'll term this as a high risk trade. And the second would be about Jubilant Food. Now again, a stock which has done pretty well for itself last 6 months, whether you look at it over the last so many years, it's been moving up quite in a trending fashion. And I think even on short-term charts there are swing breakouts which are happening for Jubilant Food as well. The earlier resistance was 2,600. The stock has crossed those levels. So I think from a near-term view, you might see the stock heading towards 2,700, 2,750 zone. That's a potential target range, and stop loss could be kept at 2,560.
Vikas, coming to you for your long-term ideas, which are the stocks you've picked out for our viewers?
Good morning, Karunya. Good morning, Varun. As far as my long-term picks are concerned today, first I would like to make a comment on the markets. The markets are on a very strong footing, and there is no complaint at all as long as FII continue to buy as ferociously as they've been doing over the last few days, the last month or so. I continue to remain bullish on the market. However, one needs to be cautious and one needs to remain with quality at this time. And my 2 picks from a long-term point of view, the first one would be a leading infrastructure company. The name of the stock is NCC, Nagarjuna Construction Company. A pretty solid company when you look at the fundamentals of the company. Within the infrastructure sector, it is one of the few companies where the balance sheet quality is pretty strong. They've pretty reasonable debt equity ratio, and the margins are also pretty strong, and they have a very strong order book of around 30,000 crores, and they keep getting orders at regular intervals, which would clearly have a pretty strong revenue visibility. The stock actually had corrected about a year back when there was a change in government in Andhra Pradesh and when some orders were cancelled. But it is learned that they've been able to resolve their issues with the Andhra Pradesh government, and there are new orders which they're getting from Andhra Pradesh also. So all in all, a pretty good stock, and our market's legendary investor, Rakesh Jhunjhunwala ji, who's already owning a substantial chunk in the company, had recently raised his stake in the company. So I remain bullish on the stock at the current levels of around 56, 57. One should be buying into the stock, and I think in the next 9 to 12 months, we could easily see levels of 90 rupees on the stock. The second stock which I would like to recommend today for your viewers would be a metal company by the name of Midhani. It's a PSU metal stock. It's into high margin specialized alloy steel and those kind of metals. So the company enjoys pretty stronger margin when you compare it with other metal stocks. And this company has done well, and pretty solid fundamentals. Their margins, as I was talking about, are pretty robust, and then it's an absolutely debt-free company with high return ratios. So I remain bullish on Midhani at the current levels of around 201, and my targets are 300 rupees in a year. This company caters to mainly defense and aerospace, and with the kind of focus which the government has on the defense sector, and we are just about a month or a month and a half away from the union budget, I think this stock should be on the radar, and in the next 9 to 12 months, I'm pretty positive that we would certainly see levels of 300 rupees in the stock.
Great. That's a very good positive outlook on both those recommendations. But now let's get on board the queries which have come in from our viewers. We actually just have one today from Samir Arora of Mumbai, who's bought 200 shares of Can Bank at 90 rupees a share. And he's looking at things from a medium-term view. So perhaps now that the QIP is complete, is there a possibility of any re-rating? Kunal, on the chart, what do you think? Can Bank poised for a higher move, perhaps, given that the fundraise is just complete?
It seems like, because Varun, what we saw on the PSU banking pack overall was extremely strong price action. So 50% plus kind of a gain in a matter of, I think, 40-45 days for the PSU banking stock, and that too, I think, on a strong footing, has been extremely good for the PSU banking pack. And I think Canara Bank in that regards looks extremely strong. So I believe if you bought at lower levels, sub 100, then I believe that you should definitely hold on to your investments over here. I think gradually, as and how the trend unfolds for the PSU banking pack, you will see these stocks going through a much more sustained uptrend. So the pace of rally on an everyday basis would probably drop down, and you will see the stocks going up into a gradual kind of an uptrend. That's a hallmark or a quality of stocks which end their first wave of rise and then go into a gradual uptrend. So I think Canara Bank and many of these other PSU banking stocks, they could be poised for that. You have a cushion already in terms of a buy price, so I would advise a hold.
Okay, Vikas, how about you? What is your view on Canada?
Yeah, Karunya, again, I also share a similar kind of view. I would maintain a hold on Canara Bank. The investor has bought it at a pretty lucrative price of around 90 rupees, and he's seeing around 30% gains on the stock. However, recently they come out with an OFS which saw tremendous response, but the OFS price has been fixed at only about 103, 104. But I maintain my bullish view on Canara Bank. It went up to highs of 140 after the tremendous response to its OFS. And I think we could pretty soon see those levels again. And as it is, PSU banking sector is in focus with most of the PSU banking stocks doing well. So my advice would be to hold on to the stock at the current levels.
Okay. Thank you, both of you gentlemen, for helping out our viewers as always and sharing your views on different stocks and the markets at large. Moving on, Chris Wood's latest report on Greenfield is out. Vivek is standing by with all the key highlights. Vivek.
Much anticipated weekly newsletter of Chris Wood is here, and this time around too he continues to focus on the opening up trade. Now what he is saying is that unfortunately there has been some renewed negative focus on the course of the pandemic, and this he believes is mainly because of the fact, and it is not surprising since the deaths in the US is something that continues to rise. He also takes note of some small localized lockdowns that have been spread across the globe. Now the other important thing that he is maintaining is that given the fact that there have been a certain amount of concern in terms of actually having logistics in place for vaccines to be delivered to various nations, he continues to say that the bottleneck is not in coming up with the vaccine itself, but rather producing it at large scale. Now, despite all of that, he continues to believe, and greed and fear, he says, will stick to the cyclical trade and advises investors to add to the cyclical exposure in case of any pullback. He continues to believe in the recommended back to normal trade, and he also makes some adjustments as far as Asia Pacific ex-Japan return related portfolio is concerned. What he is doing is that he reduces the allocation in China by 2 percentage points. He increases the allocation in India by 1 percentage point, and also 1 percentage point goes to Korea. Within the Indian market, a very interesting change has been made. He reduces the investment in SBI Life. In fact, he removes that investment in SBI Life and he replaces it by a 4% investment in ICICI Prudential Life Insurance, and the remaining 1% he adds to his exposure to ICICI Bank. So watch out for these stocks. They could be quite active in the session.
Okay, thanks for that important update, Vivek. Good to hear that Chris Woods and Jefferies are still bullish on India and they'll be increasing weightage here along with Korea. But on that note, let's slip into a quick break on Buy Now, Sell Now. Stay tuned. We'll be back in just a minute. Hi, welcome back to ET Now. You're watching Buy Now, Sell Now. Aviation stocks, that's currently the segment that's really trending for various reasons. Airlines have announced a lot of exciting news, return to full capacity for some. In the case of SpiceJet, a tie-up for logistics. So a lot happening. The sector's in focus, and of course, crude is now back above $50. So let's go across to my colleague Poonam, who's going to highlight all the key features of the sector and what's currently the driving forces behind it. Let's listen in.
Well, airline stocks are definitely in focus today. In fact, the crude price is rising to $50 per barrel at a 9-month high. Does mean that we should see higher operating costs coming in for the airline stocks. To know that fuel prices make up for nearly around 40% of the overall operating cost for the airlines, and every $1 change in crude prices does impact the EBITDA by around 60 odd bips. So that does mean that we should see higher operating costs coming in for the airlines. However, analysts do mention that with the government now allowing airlines to in fact operate at 80% of the capacity, and there are expectations that we should be seeing airlines operating at 100% capacity by next year as we have the vaccine round the corner and as fears of COVID do recede. Airlines, if they operate at 100% capacity, that should really offset the entire impact of the crude, and also it should help them in terms of the overall revenues. Indigo has already mentioned that they plan to operate at 100% capacity by sometime early next year itself, and do note that they're already operating at 70% capacity. SpiceJet also, although cargo revenues form less than 10% of the overall revenues, they're also diversifying in terms of the revenues by partnering with Snowman Logistics and Om Logistics for transportation of vaccines. So yes, it's a positive news for the entire airline sector.
For that, Utkarsh is joining us right now to break down the data released by CM earlier this morning for different segments of the automotive industry. Utkarsh, tell us more.
The SIAM data for the month of November is out. What is it telling us? It is telling us that the car sales are up, the two-wheeler sales are up, scooter sales are down. That is a concern. Now let me take you through the numbers. Now first, passenger vehicle sales are up by 16.95%. That's a good number really coming in. Then let's say two-wheeler sales, a growth of only 3%. Scooters on the other hand are down by around 5%. Now let's look at since lockdown what has happened. Since lockdown, the car sales are still down 20%. There's still 20% scope and lesser cars being sold. In terms of two-wheelers, we are still down 25%. The sense which you will get when you look at these numbers is that in the month of November, car makers have slowed down the dispatches. Why are you not feeling it in the numbers? Is because last November was in Diwali. Diwali was in October, November was a weak month. This November, we had Diwali coming in, and that's why you have the Dhanteras sales adding to it as well. So after adding the Dhanteras sales, is the number looking as good as it was? Maybe not. And that can be a worrying sign, especially for the two-wheeler space. A mere 3% growth in that motorcycles up 5%. If you look at top two-wheeler manufacturers, they have slowed down production in November. We have been told they'll continue to do so in December. But for car makers, it was good Diwali and it looked like a Merry Christmas. We have to really wait and watch for the December numbers and then the inventory levels in the two-wheeler and four-wheeler space to get the correct idea.
Thanks for that, Utkarsh. Meanwhile, the TVS Group is changing its ownership model. All the members of the family-owned conglomerate have agreed to synchronize ownership structure. Post the change, the holding company will cease to exist and the company will restructure itself by giving each family member group complete ownership of the businesses that they manage. For instance, there are 4 families essentially among which the business will be split into, and now these 4 families with 4 sons each, or rather 1 son from each of these 4 families will inherit the businesses. For instance, Venu Srinivasan will be taking care of TVS Motors, TVS Credit, Sundaram Clayton along with his family. Suresh Krishna will look after Sundaram Fasteners. R. Dinesh will take care of TVS Logistics, TVS Automobile Solutions, and Shobhana Ramachandran will be in charge for TVS Sri Chakra. So these businesses, essentially whoever is managing it will continue to be at the helm of these businesses. Of course, the future course of some finer details and nuances will be decided later. A senior panel of members has been nominated, which will now deliberate on how to best implement this arrangement. But for now, this is what it is. They will completely do away with the group holding company and the holding structure. The existing management of listed as well as unlisted companies will continue. In fact, for understanding the same better, earlier this morning we caught up with Sailesh Haribhakti to know what the TVS rejig means for shareholders. Here's what he said.
It is because people like TVS are setting the example that we will find solutions for other complex situations which continue to exist. I think increasingly people are beginning to focus not on their personal shareholder value creation, but on stakeholder value creation. And when that shift happens, then all of these positive forces get reinforced and they start operating. And therefore, what will emerge and how this group will perform over the next 3 to 5 years will become a great beacon of good example for others to follow. So I'm looking forward to this with very, very great anticipation. I am a firm believer that if families can see the bigger picture, because ultimately it is the community feeling, it is the strength of the family which holds you, binds you together, enables you to overcome so many of the difficult exogenous factors which we are facing today. Just simply think of what we are going through today. 8 months, virtually very little physical contact. And these are the kind of exogenous factors which are going to drive people to thinking differently. So I don't think this will be a template, so to speak, but the 4 things which are getting distinguished are very clear to me. Ownership, separate from governance, separate from management, separate and there, whether family management or professional management. So these 4 constructs are appearing very clearly. And the driving forces are shareholder value creation and the emergence of so many endogenous risks.
Hi, welcome back to Buy Now, Sell Now on ET Now. 2020 has not been a rosy year for the Indian Inc. and markets, but it's not the same for the Adani Group. Despite the pandemic fears hovering, the group has managed to double its market cap in 2020. That's across all their listed entities. My colleague Jayesh joins us with this special report.
A few days back, we did manage to tell you how 2020 was a stellar year for Elon Musk. And guess what? We may have found his counterpart from India as well. In the form of Gautam Adani. Not only has he become the second richest Indian person, but with more than $20 billion added to his net worth this year itself, he has added more wealth than Mukesh Ambani himself. And all of this is courtesy the stock performance of the Adani Group. which also brings me to the point that the Adani Group market capitalization has more than doubled in this year so far. The group market cap now stands at 4 lakh crores, which is a whopping 100% higher from where it was during the end of 2019. Followed by the Tata Group, which has seen a 27% increase in its market capitalization. You have the Mahindra Group, which has seen 25% increase in its market cap. And you have the Aditya Birla and the HDFC Group, which have seen about 10 to 20% increase in their market capitalization. So which are the stocks that have contributed the maximum wealth to these group portfolios? From Tata's, it is TCS adding more than 2 lakh crores. Then you have Adani Green, that's been the stock of the year, more than 1.3 lakh crores in terms of market cap that is added this year. Then you have HDFC Bank, nearly 70,000 crores. And then you have Ultratech and M&M, which have also managed to add more than 25,000 crores. But all in all, 2020 has proved to be a great year for the Adani Group companies.
For that, early in the day, we spoke to Adrian Lim from Aberdeen Standard Investments and asked him about the trends of flows in India. Let's listen into what he said.
Actually, it's been a steady improvement and a very quick recovery since the lows in the region in March and April. I think if you compare India against developing markets as well as the Asian region as a whole, India is quite slow in the June quarter, but has picked up momentum recently. And that's nice to see a reallocation back. I think part of that has to do with quite a few macroeconomic developments that are global, because we see this strong rally, or what you call spring, has come early. Not just in India, but across capital markets. But part of that has also got to do with India-specific issues. So clarity on the US elections, the rising amount of positive news flow on vaccine development has contributed. And the fact that in India, although the COVID pandemic remains a big challenge, there are pockets which where the numbers and the statistics have looked to mature and in various phases of stabilizing. So the vaccine helps positive sentiment with respect to that.
Taking a break here, stay tuned to Buy Now, Sell Now for more updates on the other side.
Welcome back to ET Now. You're watching Buy Now, Sell Now. Let's bring up the quiz answer for you today. Which of these pharma companies saw double-digit growth in secondary sales in the month of November? The answer was Ajanta Pharma. Unfortunately, nobody got it right today, so we don't have any winners to feature on our channel. So clearly, sometimes these questions are a bit tough, but don't get discouraged. Please keep participating. And when you do get them right, you will definitely be featured at 11:45. But let's switch gears now away from the quiz and coming to the realty sector. And with property prices at one of their lowest levels, the topic of a second home is worth exploring for those individuals with investable cash, especially in the smaller towns. So on the Money Show, we caught up with Manav Singh, founder and chairman of Aroma Valley, to explore if it's worth investing in houses in Tier 2 and Tier 3 cities, and what are the yields one can expect as well. Let's listen in.
The metros especially are significantly overpriced. How is it possible that you can get a home in Delhi at the same price as a home in one of the large cities from the world, like New York or Washington or whatever? So I think the upside is very limited, and it's all got to do with, I guess, demand and supply. But all that is now moving to the Tier 2 and Tier 3, and we are definitely seeing, I can talk about North India because I'm more familiar with this part of the world. Places like Chandigarh, the prices have gone up by about 20% in the last 3 to 4 months. Places like Simla, they've gone up by maybe 10 to 15%. And Simla is probably less because there are not too many developers out there. But I think there's an opportunity for people to make money in the tier 2 and tier 3 places.
Do investments like a second home in the hills? Hills is also a great vacation spot where Aroma, of course, as well has properties. Do they tend to generate better yields? I mean, on an average, how do you see customers essentially? What are the sort of rents they enjoy? And how easy is it? Put it up and allow others as well to enjoy the usage of the property, because that as well is a great way to earn a second income.
Yeah, Mobina, so I completely agree with you. So I think if you're looking for a tier 2 place, which is more commercial, more established, like a Chandigarh, you expect a certain rental income, which is going to be lower compared to a vacation area. So, for example, if I'm just giving you an example of Thailand, if you go to a Phuket or a Koh Samui, it's a vacation area, so the rental incomes are going to be higher. So to answer your question, I think places like Simla or a Mussoorie or a Goa, where there are a lot of vacationers who go, these are the places which are beautiful, serene, great environments, etc. I think these places have a much better opportunity for rental. Obviously, these are short-term rentals, and with all the platforms out there nowadays which allow you to rent your properties, it shouldn't be very difficult because these platforms are very, very simple to use, and a lot of people are now on these platforms, and they actually prefer to use these platforms and go to a home.
All right, that was an exclusive chunk from the Money Show. With that, we're wrapping it up right here on Buy Now, Sell Now. Thank you so much for tuning in.